Federal Reserve raised interest rates by 1/4 percentage point yesterday, as expected, but said more hikes would be needed to bring inflation down.
Yeah, and Fed Chair Jerome Powell said that while inflation has improved some, it's still too early to declare victory.
The inflation data received over the past 3 months show a welcome reduction in the monthly pace of increases. And while recent developments are encouraging, we will need substantially more evidence to be confident that inflation is on a sustained downward path.
Well, Rick Newman is a senior columnist at Yahoo Finance and joins us now to talk more about this and what it means for you. So, Rick, good morning to you. Thanks for being here. Markets seem to be encouraged by Powell's words on inflation yesterday. What did you make of the hike and his comments?
It's very interesting to look at the stock market reaction relative to the timing of what comes out of the Fed on these days. And what happened yesterday was when the announcement came that they were raising rates by 1/4 point, that was at 2 p.m., markets didn't really move very much. Then they drifted down a little bit. And then when Powell started speaking, within minutes, the stocks jumped yesterday. And the reason for that is investors liked what Powell had to say because he sounded different. It sounded like he was beginning to say, maybe we are accomplishing the job here. Maybe inflation is coming down enough so that we can stop raising interest rates sometime soon. So what seems likely is there's going to be one more 1/4 point interest rate hike next month, and then that could be it. That might be everything. And of course, the real determinant here is what happens with inflation. As Powell said, it has come down. It needs to come down more, but there's a lag of months between what the Fed does with raising interest rates and its effect on inflation. So things are going in the right direction, and generally this is good news.
Rick, do you see any universe in which rates could actually go down this year?
Rates have been going down. So what we're talking about here with the Federal Reserve are these rates that the Federal Reserve charges to banks, and those do affect interest rates in the real market, but not directly, and some of those interest rates move on their own. So what we've seen this year is mortgage rates, for example, went as high as a little bit over 7%, and they are now down to about just a little over 6%. So what that tells you is that the market is deciding that we may be close to as high as interest rates are going to get. Demand for loans also factors into that. But I think if you're somebody who's considering buying a house or a car, for example, and borrowing the money, that this probably means that mortgage rates and car loan rates are topping out. You can never say for sure, but we may be as high as it's going to get in terms of the cost of financing these things.
And sticking on that topic there, what is your advice to people trying to navigate that situation with mortgages and credit cards? They have a lot of questions about what this actually means for them.
Well, the housing market is the most interesting part of this because one of the effects of rising interest rates is that demand for houses has slowed down, and that is actually bringing home prices down. Of course, we saw a big jump in home prices during COVID when interest rates were at record lows, and a lot of people just wanted to buy homes during that time. So prices shot up, and now they are inching down. So if you want to buy a home and you can wait, there is reason to think that prices are going to drift down a little bit more from where they are right now. They're not going to crash. Prices are not going to crash like they did after the housing bust in 2006, but they probably are going to come down a little bit more. And it's possible that maybe mortgage rates are going to stay where they are. So there may be no penalty to waiting if you want to buy a home. And I will say, as for cars, car prices are going to stabilize as well. And if you're looking for a used car, those prices are also coming down. So that's another area where we saw this huge surge in prices last year. That has reversed. And at this point, there's really no harm to waiting if you're saving money and thinking about buying one of these things.
All right, Rick Newman, good advice. Thank you.
Thanks for watching our YouTube channel. Follow today's top stories and breaking news by downloading the NBC News app.